This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Box office success. Disney's string of movie hits powers its quarter, but its next big bet won't be on the big screen. It'll be on the small one.
Return to sender. The Postal Service delivered a loss. The reason? It delivered more packages.
Sweat equity. If you build it, bounce off it, or hang from it, will they come? What the fitness industry is doing now to get a leg up on the competition. Those stories and more tonight on Nightly Business Report for Tuesday, August 9th.
Good evening, everybody. Welcome. The NASDAQ closes at a record. But tonight we begin with Disney. The blue chip company rode a wave of box office hits like The Jungle Book, Finding Dory, and Captain America to a very profitable quarter. That increase in studio revenue helped offset sales at its cable unit, which fell short of Wall Street expectations. And the biggest surprise was a major investment in a video streaming company formed by Major League Baseball. It's called BAMTech. Overall, Disney earned $1.62 per share, 1 cent better than estimates. Revenue of $14 billion also topped expectations and was about 9% more than a year ago. But investors apparently wanted more, and shares fell in initial after-hours trading. Julia Borston, who spoke with CEO Bob Iger, has more on Disney's quarterly results.
The big headline from Disney's better-than-expected earnings results is commitment to digital. The media giant announcing it's buying a third of streaming video company BAMTech for $1 billion, with plans to buy a new sports app that's a collaboration of ESPN and BAMTech. It also plans to use the new technology to create streaming video apps and products for the company's other properties.
We think it's a good investment. We love their business model. We think that in today's world, having the ability to stream on a scaled basis live sports and live programming is a competitive advantage.
Disney CEO Bob Iger says this investment leaves the door open for the company to eventually bring its core ESPN service direct to consumers outside the bundle if and when it makes sense. And in the meantime, Iger says Disney's adapting as consumers shift to smaller TV bundles, announcing that its 7 biggest TV channels will be included in the DirecTV Now bundle in the works. Back over to you.
Julia Borston reporting. Bill Smead owns Disney shares and has for a long time. He's CEO of Smead Capital Management. Bill, welcome. Good to have you with us.
Thanks for having us.
What do you think of the strategic directions that Mr. Iger seems to be taking Disney? The smaller bundle, a different way to reach viewers on television?
Well, the first thing is their genius is these multiple brands in multiple areas and nurturing those brands. And what we've always believed is if you've got great content, you don't really have to fear the distribution system, right? There's been a lot of concerns about the changes in the distribution system negatively impacting their addicted customers. But what I think we heard from him today, for example, in this BAM investment is when you're a Major League Baseball fan and you've got season tickets to a team and you follow them on the road, you can't get enough contact with them, right? You can't get enough information. They're going to be at the cutting edge with their content everywhere it's needed.
So are you saying that the ESPN worries, which, kind of knocked the stuffing out of the stock a couple quarters ago, that those are in the past now?
They are a normal part of the ups and downs of a widely diverse portfolio in the entertainment business. I thought of it today. I thought, there are certain companies in Warren Buffett's stable of companies that he owns or stocks that he owns in the Berkshire Hathaway portfolio, and there's always somebody having a hard time in that, stable of companies. And that's the same thing with Disney. Right now, Captain America is hotter than a pistol, and ESPN has calmed down a bit, maybe because it's harder to get commercials into soccer games than it is to football and basketball and baseball.
Let's talk about the stock. It has been a little bit bruised in recent quarters. What have you been doing with your holding?
Well, we added to it recently, and here's one of the reasons, Tyler. We looked at many of the most appealing and successful major branded companies with addicted customer bases, the Nikes, the Coca-Colas, the Procter & Gamble's, et cetera. And what we found out is this is far and away the cheapest of those companies on both a price to earnings forward basis and also on a free cash flow generation. By the way, the thing that matters most to us in this report, free cash flow was up 51% year over year. So if you owned the entire Disney Corporation, you had 51% more money, way over $1 billion more, that you could do whatever you wanted with this quarter as compared to the year before.
Very quick answer here. What happens after Mr. Iger leaves? You worried about that? Quick, yes or no?
Well, the answer is you want somebody really good to take his place. And since he has been such an effective cultivator of other talent, I think he'll find a really good person to take over stewardship.
Bill, thank you very much. Bill Smead with Smead Capital Management.
Thank you.
On Wall Street, the Nasdaq closed at a record. The S&P 500 and the Dow inched upwards. The gains, however small, came despite a decrease in productivity and some weak retail earnings. We'll have more on that momentarily. By the close, the Dow Jones Industrial Average rose 3 points to 18,533. The Nasdaq added 12 to a record 5,225. And the S&P 500 rose fractionally.
Worker productivity fell for the third straight quarter, and that is the longest stretch of productivity decline since the late 1970s. Productivity, which is the output of goods and services produced per hour worked, decreased 0.5%. Economists expected an increase. The pace of productivity growth is a key factor in determining how quickly worker pay and economic output can grow without triggering higher inflation. Sluggish productivity gains, like we've been seeing, can restrain wage and economic growth and weigh on American living standards.
And Americans are borrowing more to finance vehicles. They're also making more purchases on their credit cards. According to a quarterly survey by the New York Fed, total household debt in the U.S. hit more than $12 trillion in the second quarter, and that's an increase of about $35 billion from a year earlier. Mortgage debt, though, hasn't moved much in the past 2 years, and total student debt declined over that same time frame.
A major Republican donor is now backing Hillary Clinton. Former MGM CEO Harry Sloan, who served on the National Finance Committees for both John McCain and Mitt Romney, says Donald Trump is unprepared and temperamentally unfit to be president. John Harwood follows the story for us tonight from Washington. Harry Sloan, John, is not the only Republican to oppose Mr. Trump. GOP Senator Susan Collins of Maine, a key state, a number of national security officials have added their names to the list. My question really is, how significant is it in light particularly of the fact that much of Mr. Trump's support is not based on affiliation with the GOP establishment?
Well, it's significant for two reasons, Tyler. Not each one individually. It's the accumulation of them all happening at the same time that is sending signals to wavering Republicans, wavering independents who lean toward Republican, that maybe this guy isn't okay and we should go with the other candidate in the race. Donald Trump has a base of support, and as you mentioned, it's not attuned to the elites, but it's not a big enough base of support to win. He needs to add votes, and the places he needs to get those votes are from some of these Republicans who are defecting.
Which may be why he made kind of a controversial comment on the Second Amendment today. Take a listen.
Hillary wants to essentially abolish the Second Amendment. By the way, and if she gets to pick her judges, nothing you can do, folks. Although the Second Amendment people, maybe there is, I don't know.
How's that going to play?
Not well. Look, Donald Trump seemed to be making a joke. It's a joke that some people, including the Clinton campaign and some in the audience actually sitting behind him, took as a kind of breathtaking allusion to violence. Now, the Trump campaign says, no, we were talking about mobilizing Second Amendment people behind Donald Trump in the election. And certainly they are going to mobilize Second Amendment people behind Donald Trump. But at a moment when the argument is his fitness for office, even joking about a topic like this seems to be something that adds to the troubles that Donald Trump has had as he's trying to shift toward issues like his economic plan.
You know, Ms. Clinton is having some trouble of her own. 2 parents of Americans killed in the terror assault on the U.S. consulate in Benghazi are suing her for wrongful death. What does something like this mean for her campaign?
Well, it continues the line of argument that's been made since Benghazi that Hillary Clinton was negligent in some fashion. She's, of course, been cleared by formal inquiries of any direct responsibility, but this is the line that Republicans used to discredit her term as Secretary of State. Interestingly, there was a controversy yesterday when at a Clinton rally, the father of the Orlando nightclub shooter was in camera view behind her. This is something that, in addition to that lawsuit that you just mentioned, is going to fan controversy about Hillary Clinton and draw criticism. I would expect her to distance herself from the decision to allow that father into the rally.
All right, John, thank you very much. John Harwood tonight in Washington.
Small business optimism rose just a touch in July, but don't get too excited about that slight increase because the level remains well below the long-term average. And part of the reason for that cautious outlook has to do with the upcoming election. Kate Rogers digs into some of the details. So what's the feeling overall on Main Street right now, Kate?
Well, so you hit it right off the bat. So optimism is fairly stagnant on Main Street. We're at 94.6 for the reading in July. It's been climbing up and down, about 1/10 of a point over the past several months. I will mention it's a one-year high, but as someone who covers this, it's nothing to get too excited about. You're still hearing more business owners think conditions are going to be worse off in the next 3 to 6 months than those who think it's going to be better. They're citing high inventories and regulations, big two issues there, and also trouble finding skilled workers continues to come up as a really big issue.
So
for small
94.6 is not a good reading? It suggests they're not optimistic?
No, the historical average is 98. And so it's been well below that for some time. 98 was the historical average pre-recession. And so you want to see it between 100 and 105 usually is considered
that's positive.
Better. That'd be blowout. It'd be great.
Is the political climate playing into this lack of optimism?
Yeah, so you're seeing an increasing number of small business owners citing the political climate as a major reason that they're choosing not to expand right now and a major reason why they think right now is not a good time to grow their business. 36% of small business owners said that in July. That's also a one-year high, which is interesting. And last January 2015, that was at just 19%.
Is it the uncertainty leading up to the election? Does it have to do with one particular candidate of the two, or is it just we need to get this behind us?
I think it's general uncertainty. As we've discussed on this show before, I mean, there's not solid small business plans from either candidate. Even Donald Trump yesterday in Detroit mentioned, we're going to cut regulation at every level. Well, what regulations are you talking about? What does that mean? So uncertainty is a key word when it comes to both candidates. Hillary's put some bullet points on her website, but, bullet points don't lead to a solid foundation for small business growth, unfortunately. So these small business owners, they want details, they want answers. And I will note the NFIB is conservative leaning that group. They don't endorse a candidate, and they aren't saying Trump is necessarily the key answer here to small business success. So
we will see. Thanks, Kate.
We will. Thank you.
Kate Rogers.
Thank you, Kate. All right, still ahead, why the Postal Service did not deliver financially despite delivering more packages.
Delta passenger faced more delays and canceled flights today. This as that carrier tries to get back on track after the airline's computer system was shut down worldwide for about 6 hours yesterday. Delta is attempting to thin out its schedule to help normalize flight operations.
Losses are mounting for the U.S. Postal Service. The independent government agency has been losing more money than it's been making for the better part of a decade. This as it struggles to increase share in a market that is now dominated by email and e-commerce and not sending first-class letters. But there was a sliver of positive news. Morgan Brennan has more on the Postal Service's financial health.
Another quarter, another loss. The U.S. Postal Service lost more than $1.5 billion last quarter. But things aren't quite that bad. If you take out fees that are mandated by Congress and not related to operations, the operating loss was only $552 million. Still, today's results showed it's all about e-commerce, which the USPS has been aggressively betting on for a turnaround. Package revenue grew 18%, helping to offset further declines in first-class mail, where volume keeps shrinking and stamp prices were lowered in April for the first time in a century. But as post offices handle more packages, more money must be spent to ensure their delivery.
They are delivering on Saturdays and Sundays, and as that volume increases for that service, they do end up with a higher cost because especially on Sundays, they don't have mail to deliver, so they cover the cost strictly with the package service.
Last quarter, that translated into a nearly $500 million jump in costs as more workers and more vehicles were needed to get more goods to doorsteps. Experts say much of that is the Amazon effect, since the Postal Service is Amazon's biggest carrier. With 1 billion packages shipped by Amazon last year alone, carriers have scrambled to keep pace. Earlier this year, the USPS raised some parcel rates to help compensate for those rising costs. And today, the agency said further hikes will be considered. The Postal Service is hoping that this push into package delivery will eventually pay off. But on the heels of today's results, the question is, how long will it actually take? For Nightly Business Report, I'm Morgan Brennan.
Not as many people want to take cruises to Europe, and that's where we begin tonight's Market Focus. Norwegian Cruise Line is cutting its earnings guidance for this year and next due to falling demand from North American customers and a weaker British pound. In the latest quarter, the company managed to beat on earnings, but revenue came in a little light. As a result of that, shares fell nearly 12% to $37.91. Valeant Pharmaceuticals reported a loss and a drop in revenue in the most recent quarter, but investors welcomed the CEO's plan to reorganize the business. In addition, Valeant reaffirmed its full-year outlook and said it will trim more than $5 billion from its debt over the next year and a half. Shares were up 25% to $28.16. Tribune Media said its loss widened as steep income tax charges tied to the sale of the company's Newsday newspaper hurt its results. But even so, earnings were good enough to top estimates. The company did, however, miss revenue targets despite an increase in political advertising. Shares fell 8 cents to $37.22.
Job recruiting website Monster Worldwide going to be bought by the staffing company Randstad Holding for $429 million. Under the deal, Monster will delist from the New York Stock Exchange, but will remain an independent entity. In addition, Monster reported a loss and a decline in revenue in its latest quarter. Shares of Monster up today, though, 26% to $3.50. Wayfair said an increase in expenses caused the home furnisher to post a wider than expected loss. The company did, though, report a rise in revenue, and that surpassed estimates in part because of a 65% increase in its number of active customers. CEO Niraj Shah spoke about the company's progress in scaling the business.
We've been at this 14 years. So our systems, the technology we have, the 5,000 people we have, we've gotten past those initial growing pains where, the question is, do you keep going? Do you build those hardened systems? Do you scale them up? And we continue to do that. And then we see more and more opportunity as the years go by.
Shares fell more than 19.5% on the day to $38.80. Gap, meantime, isn't out of the woods just yet. The apparel retailer reported a 4% drop in same-store sales for the month of July. Its Banana Republic brand slipped on appeal. However, Gap earnings guidance for the second quarter was significantly ahead of analysts' expectations. Shares, though, slipped as well, down 6% to $24.01. Domestic sales grew for the first time in more than 3 years at Coach, but that upbeat news wasn't enough to help the handbag and leather goods retailer clear revenue targets. It did, however, top profit estimates and announced plans to discontinue selling its products in department stores. CEO Victor Luis said despite global economic concerns, he still believes in the brand.
There's obviously a tremendous amount of macroeconomic pressures that are taking place right now, whether it be impacting the impact of currency, geopolitical issues such as Brexit, and of course some of the tragic terrorist attacks that impact sentiment, especially around luxury goods. But long term, this is an amazing category, and I believe the most attractive category in the fashion space to be in.
Shares fell 2% to $40.51.
In addition to getting the earnings results from Coach and Gap this week, we're also going to hear from some of the department stores, Macy's and Kohl's on Thursday, while Nordstrom and JCPenney are both on tap for Friday. So let's turn now to Dana Telsey, CEO and Chief Research Officer at Telsey Advisory Group, for more on what she's expecting from the retailers reporting this week. Good to see you, Dana.
Thank you. Thank you so much for having you. Nice to see you, too.
Let's start, first of all, with Macy's, because, it's had some very tough sleddings. What are you going to be looking for in Macy's report?
I'm looking for what the same-store sales are. I think overall, obviously, they had a poor first quarter in same-store sales, down just over 6%. I think the second quarter, we want to see if it's continuing or if there's any slight improvement. I think we're also going to be watching inventory levels very carefully and also margins. There isn't any department store company that isn't looking to reduce inventory levels and manage their margins. We heard about a lot of promotions during the quarter, so that's one of the things we'll be keying in on.
Let me turn you back to Coach and Gap, two companies that have struggled in recent times. Are they getting better?
I think Coach is getting better. Remember, it's been a 2-year turnaround plan in June 2014 that they laid out their turnaround. They said that they'd have positive comps 2 years later in June of 2016, and that's what happened. I think the downdraft in the stock today came from the fact that they are reducing some department store exposure. It's hitting them for 100 basis points on the sales line for the guidance for 2017. I think it positions them stronger on margins. Gap is a different story. The improvement in earnings in the second quarter came from careful attention to margins and expenses, while sales decelerated at the end of the quarter.
Let me turn you to the luxury part of the market. And Nordstrom is upscale. It's not specifically luxury, but it certainly is upscale. What are you expecting from their results, and what about the state of luxury overall?
I think overall, what I'm expecting from Nordstrom, I want to see how the components of the same-store sales are. They break out the full-line department stores, they break out Rack. I think you're still going to have the full-line department stores down in excess of 5% on a comp basis. We'll see if the negatives at the Rack have improved at all. Their anniversary sale is split between the July quarter and the August quarter, so I think we're going to have to get an update on how that is. And overall on luxury, like Victor Luis said at Coach, it's challenging for luxury now with fewer tourists, and the feel-good factor isn't what it used to be.
Right. We'll leave it there, Dana. Thanks for joining us. Dana Telsey with Telsey Advisory Group.
Today, the chief executive of Walmart and the CEO of Jet.com spoke about their recently announced $3 billion acquisition, Walmart's largest purchase ever of an e-commerce company. The CEO of Jet.com called the deal the, quote, perfect marriage.
We're serious about e-commerce and want to serve customers in the way that they want to shop. And as we've been watching Jet.com grow, we've been paying close attention to the traction that they've had and their ability to scale so quickly.
I think this just allows us to accelerate a growth trajectory and pull in profitability. The cost of goods and all the assets that they can bring to Jet is going to make our overall experience better and the financials better.
Stick with that guy. Lori sold his previous company, Quidsy, parent of Diapers.com, to rival Amazon back in 2010.
Coming up, why gyms and fitness studios are going to extremes to give their profits a lift.
Three well-known universities, Yale, NYU, and MIT, were sued over their retirement plans. The lawsuit alleges that their defined contribution plans charged employees excessive fees. The complaints allege that the universities failed to monitor the fees paid to administer the plans and did not replace more expensive, poor-performing options with more economical ones.
The competition in fitness is fierce, and that means studios are pushing the envelope to pull people in the door. With crazy workouts to get you fit, Diana Olick shows you the ropes, literally, in our latest edition of Sweat Equity.
That actually feels really good.
Whether you're hanging from the ceiling or bouncing off the walls, you're definitely not bored. And that's the strategy behind new fitness offerings in a space that is getting increasingly crowded.
How important is it to really mix it up?
So important. I think nowadays the students are getting much smarter. They're getting much more educated about fitness and wellness on all the different offerings. So it's always important as a business to constantly innovate.
At Spark Yoga in Arlington, Virginia.
Drop your toes towards the floor. Drop it towards me. All right, nice. Point your toes. And then coming into Vampire.
They're taking your downward dog up in the air, strengthening both core and grip and decompressing your spine.
Stand up, drop your weight to the fabric.
But more than that, they're attracting people who just want something new.
There's so much you can do between cycle, bar, yoga, aerial yoga, everything. And so I just try and keep switching it up to stay active and not get bored with anything.
You come up and over, tap your foot, tap your hand. You have 1, 2 each side.
Impossible to get bored at AG6 on Manhattan's Upper East Side. It's something like a human video game where you follow the lights on the floors and walls, working both body and brain.
It's ridiculous. I have never sweat so much, worked out so hard, and felt so tired when I was done.
The technology is by a Spanish company, Pavigym. They started in flooring, but have now put in over 30 of these workout studios, mostly across Europe. They tell me they will double that in the next year.
We've fielded a ton of calls, a lot of people who are really interested in the technology. Now it's up to them to head over to Spain, check it out for themselves, or even come here and then make the investment.
The system costs over $100,000, but the payoff could be big, because in fitness today, if you build it and flash it up, they will come. For Nightly Business Report, I'm Diana Olick in New York.
Aerial yoga version of NBR tomorrow night, okay?
You're on.
Yeah.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Matheson. Have a great night.